Okay, so there we had our little bounce in the markets. We had our reversal in the rates. So that 1 day reversal took place. Will it continue today? Not sure. If it does, it'll be short-lived. I think we'll have one more, maximum 1 day of a bounce left. So Nasdaq, for example, could close this gap and then we would go back down. Otherwise, honestly, we could go back down straight away. I think we've got some CPC, some index inflation numbers coming out today. Michigan consumer. I mean, every day there's news. So I think there's two or three pieces of news coming out today. The EU also have their own CPI stuff. So that's a little catalyst. So I don't know. Do we bounce a little bit more today? If we do, it's the last day. Otherwise, honestly, we could just go down straight away. I'm bearish, very much bearish. It could end up being a very bad weekly candle. So for me, Nasdaq did its thing. 1 day bounce, didn't close a high of day. Do we get one more or do we just roll over straight away? You got to watch for that close below this 354. That would be tremendously bearish for me. A close below 354. S&P, same thing. It bounced on its trend line, except its trend line is ascending, not horizontal. It's really perfect stuff. Resistance in this case, I don't think it's the gap fill. I don't think we'll get there. If we do bounce again, 433 is resistance. Like I said, a close below 433 or in particular a close below, let's say 425 would be horrible. And that very much could happen. Dow Jones tried to bounce into its horizontal. Yeah, weak. I mean, Dow Jones has always been a bit weak on the way down. I think, honestly, a close where it is now, especially below yesterday's low day. Let's do round numbers like 33,500. A close below 33,500 would pretty much uh I don't know, guarantee, but start sending it lower down towards this range, 32,780. The Russell, nice bounce, a bit like the Nasdaq. Will it go a bit higher, close the gap? If it does, 180 is total resistance. I don't think it will close above 180 if we do have an update. If we have a down day, then well, I don't think we'll get to 174, but you really want to watch it close below 174. That would send us, well, 172, this range, but more importantly, down towards the absolute low of the bear market. Let's look at the banks. Look at that resistance is prior support. Beautiful stuff. Do we close above this resistance? Do we close above, let's say, 33.50, which we almost did today, but not quite. Let's see what happens. If it's an update, you'd want to see a close above this. Well, yesterday's high of day would be ideal to just get a bit more bullish momentum. Otherwise, down we go. I think we're going to go down. KBE, KRE, they're more important. To be honest, the banks have been, I'm not going to say outperforming, but not underperforming the way I thought they would. It takes one bank, and these yields where they are, commercial real estate, um, I mean, yields are just going to take down a bank. There's no doubt about it. So something's going to take place. So KBE closed below yesterday's low of day. That could easily happen. That's bearish enough. I think we're going to go make our way down to here with the markets. If we go up, price support is resistance. So 37.50, I would say. KRE, same sort of candles. I didn't put the horizontal in, but it's the same sort of thing. So I'd say 43 is support. Let's see if we can close below. I really do think it'll be a red day today, actually. I just think we're going to have 1 day bounce and then go down. But really, if it's one extra day of a move up, that'll do. We're going to hit the nearest resistance everywhere and just come back down again. Okay, let's check out yields. So yesterday, yields came down yesterday. You can't really see it on the 1 year. You can see it was a topping tail here, but the 1 year is just always the same, sideways up overall. And there's more of that this morning. Okay, 2 year, that's the first real yield we're looking at. Look at that. Yesterday, down move to test prior resistance acting as support. So basically, yesterday, yields went down and markets went up, right? That's what I thought would happen. And I think today we're going to have a bit more of a reversal of that. So I expect a bit more of a bounce today. I don't know if markets will come down that much. It will just be maybe a bit of a bounce. But again, we have news. So 5 year today so far is up a tiny bit, but you can see yesterday was a bit of a red day, but no way did the trend change, right? It's just higher highs, higher lows, 10 year. Look at this. Look at that close. I mean, yesterday's close was not okay, it closed a low of day, but we made new highs. It didn't close below the prior day's low of day. I mean, it's just still bullish stuff. It's just a bit of a retracement. 30 years, same thing. So, but look at this, it's a huge move up. We could retrace a bit more. I mean, today I think we'll still have a bit of an update, but if this is the top temporarily, we could come back down, retest, breakout, and then go back up again. I mean, this is a real trend. This is just higher highs, higher lows, and followed by a massive blow off. Not massive, but a blow off breakout. So we could just come back down again and then go back up. Same with the 10, even the 5, the 2 could come a bit lower, but the 2 is the one that the Fed follows. So if this starts to make new highs, more interest rate increases. I think we've got 2 more Fed meetings by the end of the year. We could have another rate increase. I know they paused, but if the 2 year starts to climb again, we could have another rate increase. And by the way, it's the same with all the other yields, right? Look at the European yields. Look at this. It's just the European banks are, in my opinion, worse than the American banks. Look at the Italian yields. I mean, I remember look at this breakout from here. It just made a new absolute high of the bear markets. The Italian banks, they're in good shape. No, they're not. So look at the British, they're starting to make their way back up. Yields are seriously going up. This is going to break the system. This is the biggest threat to the system. So, and remember, the markets are going down in advance of a break, in my opinion. Okay, let's check out the dollar. So yesterday, dollar came down. Again, I thought that we had a bit of a blow off top in yields and the dollar. And the dollar in particular came down yesterday. Look at that. That's pretty, it's not the most bearish engulfing candle. For that, you'd want to see it start higher than the prior day's high, but look at that, pretty engulfing. So we could have more downside in the dollar, actually, even if yields sort of go sideways up. So maybe the dollar comes back down a bit into this 105.5 range, but we should have support, right? Look at this ascending, I mean, again, this resistance here that I noted, this 105.8, just below 106, you can see why that should act as support. To be honest, yesterday it kind of did, just above today already, but we could come down a bit more into the 105.5 range. But if you do, that's where you start getting support. And I'm sorry, the dollar's not just going to close below this strong support because it's been support for a long time. So we could come a little lower with the dollar, but I expect some buying here. So yeah, so dollar, good to see it go down a little bit, but the trend has certainly not changed. For the trend to change, I think we need some sort of macro data to change it. What type of macro data to suggest, okay, pivots or rate increases are stopping for a while, or something, let's say, taking place from a different central bank, Bank of Japan, for example, or European Central Bank. I don't see anything there, but Bank of Japan possibly. Otherwise, geopolitics, but something major news-wise, or monetary policy-wise. I don't think this will just break like that. This is very strong support. So it could come down a little bit more, but we should be in support range very, very soon. Let's look at commodities. So copper makes sense, right? Look at yesterday's candle, this big one. This is obviously Friday morning, so markets were up, dollar was down. There you go. Copper equals up, just off support, what I thought might happen. I do think that the markets will go back down again and dollar will rise. So I don't know if it's going to happen today or immediately next week, but I think this will come back down again unless something major happens to a trend reversal. So that totally makes sense, just as predicted. Natural gas. Now, I said, look, let's not look into natural gas too much until it starts to close above key technicals. But look, yesterday, that's a good close. Still not done it. For me, I need natural gas above 305. I want to close above 305. I mean, this widowmaker, as they call it, really teases every single day almost. So I'm going to go out on a limb here. I think I might do it today. I mean, it's so close. Look, the higher lows. It's about the higher lows. We haven't had higher lows like this ever in this last sort of couple of months. So I think we could get a higher high close, 305. So I'm watching that natural gas. Obviously, we're above 3 right now. So it's a very, very constructive price action. And yeah, once I see 305 close, I really think we'll start to squeeze, a la uranium. So we'll come back to natural gas for the weekend, but this looks very, very nice. Oil. So just after making a nice piercing move here at 94, and yesterday it was 95 at one point. Look at this. Now it comes back down. Boom. For me, oil has just done a massive breakout of this descending. So the fact that it's reversing is not bearish yet. Let's see what happens. This is just a bit messy. So obviously you can see where my resistance lines are. 94, this horizontal, or 93.5. And then we've got this descending coinciding. So this area is resistance. You're not allowed to just go straight past. 97 is another resistance, by the way. I'm just going to add that in just in case things get crazy today and we do rise a bit more. I don't think you're allowed to just go through 100 straight away. I think the last pit stop will be 97. And if you take out 97 or close above 97, you should be able to get to 103. But look, maybe it's just breaking out the descending, retesting the descending, right? Retest and then go back up. We had the dollar down actually, so it should have helped oil. I don't know. I just think that it's gone up quite a lot. And for me, 92, 94 is resistance. It did apply here, you know, and then straight away breakout. I don't know. Let's see what happens. But at the moment, it's just broken out this descending, which is very, very important. And a retest is not uncommon. So let's see how it digests all of that. Maybe it just curls down here a little bit and then goes back up. Otherwise, oil very, very strong and very, very scary with interest rates going up for the markets and for the consumer. Uranium, there you go. It's really acting crazy up here. I said resistance, you know, really around the 28 to 28.5 zone. Look at yesterday's high, 28.4, 4 something. So that is resistance. It's very, very impressive. It's very, very annoying to watch uranium do so well when you're not in it. But people following uranium are, I think, friends of the commodities. Obviously, it's a commodity, but gold and silver bulls, there's a lot of them who own gold and silver. It's the same general thesis, you know, resource, long-term, sort of counter dollar, counter, well, I don't know, counter establishment to some degree. But yeah, uranium, well done. Look at this. I still think you're not really going to close above 28.5. If you are, it's going to be today because these are some strong candles that it's, you know, over 3% after a candle like this the day before on Wednesday. That's really impressive. So it could actually do it today. But I think you should be trimming your position here. That's just the way I am. I'd be trimmed. I mean, I would have probably already trimmed, but if you haven't, maybe just take a little 5-10% out or something. You know, I know when the price goes up, you think you're a genius and it's going, and you are a genius, by the way, but I don't know if it's going to go all the way up to 31, 32. Just trim something here and just buy it back or buy back even more what you trim down here because, you know, you could get a minus 10, 15, 20% hit on your stock just because it's gone up so much, especially in a market crash, even though it's bucked the trend so far. So uranium, amazing, but really at resistance, in my opinion. All right, let's check out gold and silver. I'll start with gold. So gold, honestly, we lost 1885. For me, the next support, and I said it was 1860, pretty much right on the dot. So nice to see gold find support exactly where my trend line is. The thing is, you know, the dollar was down yesterday and gold was down. So that's not the best. I understand why gold went lower. It lost support. It needs to go find its next support. So it made sense, but it's not the best look when you have the dollar down by quite a bit, right? Remember that candle? And you don't really have gold green. That's not the best look you'd expect. And normally, especially after a drop like this, you'd expect a very strong counter trend reversal, but didn't happen. Again, I understand why it needed to find its support, and it has now. So maybe today, if the dollar goes down a bit more, we finally get some proper green gold day, you know, like 1875 or something we get to, but it wasn't the best. Anyway, with that said, and let's see what happens with the markets, the news, the yields, and the dollar. But I think the trend, the support and resistance lines are completely correct. So 1860 obviously was correct. If we bounce, then prior support 1885 will be resistance. Now it will be. Before I said it might not be if we reverse straight away because we were so close, but now we're $20 away, so it does count. So 1885 on the way up should be resistance. If we go even higher than 1900, if we go higher than that, then would it be this probably coincide, probably be this ascending coinciding with this descending. But it's really the descending line that counts. You know, just to make it clean, I want to get rid of that. I think it would end up coinciding anyway with the descending. So for me, that's very clear on the way up. On the way down, I think 1800 is a long way down, but I don't see any real support until there. I don't think it would get there. Let's say there's some, the news comes out bearish for gold. I don't know, probably 1840, just random 10 unit increments, 20 unit increments. I don't think it would go all the way down here on any news today. But otherwise, that's the next real clear support zone. So I'm going to leave it as it is for the trend lines. So there's your support, there's your resistance, makes sense. Let's check silver, because silver outperformed gold again. It's been outperforming for a while. Totally makes sense where it's held again. This support zone really is spectacular, and both coincided. You got this major ascending, which totally did its job again. You can't always count on it, but it did it again. Then you got this little smaller ascending, where you see every pivot 1, 2, 3, 4. So this, technical analysis works. It gives you probability, and it just worked again. And this time, look, I mean, this is the candle we're looking at, this mini Thursday one. This is when gold was down, so silver again outperformed right at the correct place. And so far today, we've got a bit more of a move up. In fact, it's 1%, I think. So that's quite nice to see. Again, whilst gold is flat, so silver's just outperforming. Where's resistance for silver? Well, honestly, it's this high zone here. You want to see a close above this high zone here. Now, let's, we know what the gold chart looks like. It's not great. But if we can get a bounce in gold, if the dollar starts to close below that key ascending line, as long as you get silver closing above this 23.5, actually a bit above 23.5, you could start to run here. And it could, it takes, I don't know, 3 or 4 days, and you could all of a sudden look very, very bullish in silver and gold. So don't discount the probability of a strong reversal in the metals. But again, that would you would need more than anything the dollar to collapse a bit more. But silver so far is doing a very good job. But I mean, this is a very key zone. Once you close below here, especially below 22, you've lost all these 3 support zones. And then the only thing you've got going for yourself is a strong reversal hammer, a flush out. But yeah, so to summarize, this is very, very impressive. Again, you can't always count on silver just saving the day. It did it again. And let's see if it continues. It can start to look very, very bullish, which means when you look back on this period, you're like, oh my God, this was so strong. This was so obvious. Well, it's not obvious when you're down here, but at the moment, it's very impressive indeed. Okay, the miners, they also performed quite well. I mean, remember, gold was kind of reddish, so the miners were up. That's good. The miners also bounced on support zone. That's good. Look at GDX, totally on the trend line. That's good. Very nice to see. Technical analysis working again. That's quite nice. Now, resistance, let's stick with technical law. So resistance should be price support, so 27.3-ish. But if we have a decent day, it should go straight through that because we're quite close. Then do we get to this sort of mini gap zone? Well, if we do, I don't think we're going to go this high, but 28, nice round number, also price support. So I'm going to leave that. I'm not going to put an extra line where the gap is. I know where the gap is, and maybe it counts, maybe it doesn't. But, yeah, 27.65-ish. Let's see what happens. We need to have some nice constructive repairing done here. We have a bounce, comes back down, maybe a higher low, another bounce, and then we start to hit this descending and close above it, and bam, up we're at 30 straight away again. Obviously, for that, we'd need the dollar to probably go down, gold, silver to rise, and we'll see what happens with the markets, right? Because the miners have been following the markets. We need that to stop, because I think the markets will go lower. So we need really the markets to go down and gold and silver to go in the opposite direction. Maybe it takes a banking crisis, but there you go. The resistance on the way up, those are the levels I'm looking at. It's very similar to gold, actually, this chart. If we go lower, then I've got 25 as the next support zone. You could say it's 26 also, because look, you've got here, and obviously 26 is a round number. So maybe 26 does act as a, a pit stop, but I think 25, 26, I'm not sure. You know what? I don't care about my chart looking a bit messy. 26 would act, I think, as a bit of support on the way down, just for this resistance, and here a back test, and it's a round number. GDXJ, same sort of thing. Look, it didn't bounce perfectly. Well, actually, it bounced off this zone. I can understand it's a rough area, but look, it closed above this horizontal support, which was resistance here, here, and support here, here. So I think I got the right trend line. I think it bounced when GDX bounced, because GDX was bouncing perfectly off its trend line. And by the time GDXJ did its thing, it then closed above its own real horizontal trend line. So very similar chart, just bouncing in a different area. Resistance is price support, 1, 2, and if we go higher, which we won't, not in one go, let's get rid of this one. Then it's the horizontal. Okay, otherwise big round numbers, 35, obviously. I'll just add that in. Again, I'm not really caring about how messy my chart looks, because I did buy stocks yesterday. I did buy Newmont, not Pan America. I bought Agnico, Newmont, and Pan America I bought the day before. So I'm starting to buy off these trend lines. So I don't care if it looks messy. I'm using it. On the way down, maybe 31, a little pit stop just like the GDX one. Otherwise, down to 30. Go on, I'll put 31 in for the same reason. But I'll probably be watching gold more than the actual miners. Yeah, so I put all my mini levels in. This is a bit messy, but I'll fix it during the weekend if it needs to happen. I hope that makes sense though. You know, support and resistance, all the mini zones I'm putting in, the logic with gold, silver, the dollar, all that stuff, yield and the markets and the news and a potential black swan. What we really need is the miners and the metals to act a little more inversely to the markets, because I think the market's going to go lower. I don't know if we have an extra day of a bounce today, or do we go lower straight away? But I think the new trend for the markets is down. And I think we've got a lot of downwards move to do. Bitcoin, honestly, it's done quite well. It went up yesterday with the markets. That doesn't surprise too much. But what does surprise, it hasn't really gone down with the market. So I think I'm going to keep these two trend lines in place, the 28,000 horizontal and the 25,000. At the minute, it does this a lot. Sometimes it looks a little bullish, but it never quite does the job. So let's see if we start to roll over with the markets. I think a close below 25,000 puts a fork in it. Anyway, that'll do. Hope that was useful. Yeah, please like, share, subscribe, all that stuff. Otherwise, enjoy and good luck.